Nations are finding themselves in more and more debt, and their central banks are attempting to be there to pick up the pieces. Today we will discuss examples of the dying global economy. You came here for the truth, so let me unveil that for you. We're going to get into an absolutely jam-packed episode today. I have way too much to cover, but I need to get to it all. I didn't get a chance to make a video yesterday. Greek markets suffer the worst sell-off in history as economy is decimated by capital controls. What we're looking at is an absolutely massive sell-off that is occurring. Take a look at this. Bank shares decline by a maximum daily limit of 30% as investors hammer the stock markets following a 5-week trading suspension. If I'm not mistaken, it was down 23%, basically right at the opening bell. So you're looking at an extremely high rate of sell-off occurring in a short period of time. What does that mean for your money when this happens to you? People think that they'll just be able to sell off if things get bad. But if it can sell off 23% instantly, what do you think could happen to your money in other markets around the world? Well, of course, the same thing. People in Greece are suffering, and it's not getting any better. Of course, I haven't been covering it because I did cover quite a bit over those time period. And now we're just showing you what's going on there. It is still going on. I will continue to cover it. This is about the Federal Reserve. We all love the Federal Reserve for their generosity in expanding their balance sheet to above $4.5 trillion. The Federal Reserve is about to take an unprecedented plunge into money markets. It plans to make it a limited time offer. Oh, sure, I truly believe that. But the assets are so attractive that it may be forced to extend the life of the deal. As soon as this year, the Fed policymakers will greatly expand the $100 billion market for overnight loans known as the Reserve Purchase Agreements. They are designed to suck the money out of the financial system so that the Fed can raise short-term interest rates. Every plan they try to do fails. It never works. They expanded the balance sheet all the way. They brought the interest rates down to zero. They engaged in Operation Twist, which was a complete waste, and now they want to expand on their other programs as well in order to attempt to increase short-term interest rates. I believe that they could go to 0.25 on the interest rates at some point. They specifically have stated they're not ready to do that yet. Well, at what point will they? Because the economy is getting worse, not better. So I don't know what they're planning on doing, but here we are, Federal Reserve telling lies as usual. This here is about the real dying economy. We can look at the Federal Reserve, see the expansion of the balance sheet. That is very important. I believe it's an important indicator. But when people aren't getting paid, when people are really affected by capital controls, to me, that's the real economy. Kansas plans to keep a controversial $25 limit on ATM withdrawals by welfare recipients, despite the possibility that the restriction might violate federal law. So essentially what happens here is they have this law and they restrict the welfare recipients to $25 a day. And they also said that out-of-state purchases will also be blocked. What we have here is a mild attempt at capital controls. It affects a few select people, but what this does is set the precedent for future individuals to be restricted by similar accounts. So this could occur to you no matter where you are in the country, no matter what your status is. What they do is they initially set it up as one group, and then they move on to the next group and to the next group. Suddenly, everyone is affected by these capital controls. You need to understand the reason that they do this is not just for the stated purposes, but it's also much more to be able to control the monetary system. They want full control of it. They want to bring in all of their wealth, let's call it, but they want to bring it into the banking system, and they want that held by them because of what they plan on doing in the near future. Detroit. Some teachers might complain about the size of their paycheck. Detroit public school teachers are hardly surprised when they don't get a check at all. Now, this is a seriously dying economy. We need something that would effectively, regularly pay the teachers what they're owed. They do the work. They need the pay. They need it on time with bills to pay. All they get now is a runaround. Imagine this. It's not a small mom and pop shop. We're talking about government employees, teachers not getting their paychecks. Why? Because the government can't afford it. That's how seriously bad the situation is in Detroit. And think about it, if you really think historically, not that long ago, it was a prosperous city, booming. And now it is absolutely dying, rotting. Let's look at this. Out of my book, talking about the so-called entitlement programs of Medicare, Medicaid, Social Security. What I suggested was that unless they reform, as they like to use that term, reform entitlements, there's going to be some huge problems. So the unfortunate result of it, though, would be that people would not tolerate it and would start to riot. They're used to the entitlements and are not prepared to do without them. So if they start to pull back on the amount that people are getting every month, they're going to be rioting in the streets. This is what you have to be prepared for in every major city around the world if they do this activity, not just in Detroit or the US, but in the whole world. If they're used to getting a handout and all of a sudden you take that away, surely they're going to be upset. Now we move over into China for a couple of articles here where I want to discuss this as automation becomes a very serious problem. Now, automation is excellent. It really saves us time, saves us from the real tasks that people don't want to do. And that's why we have these robots to do that work. But what happens when a Chinese factory replaces 90% of humans with robots? Well, of course, production soars. This is going to be the next real evolution here in offshoring of jobs. No longer do you need to offshore to China, you need to offshore to robots, and that's exactly what is occurring. This factory here is just one example. They're all going to go this route. Let's move on to the Chinese farmers. You may have seen it, who basically decided that instead of farming, they're going to trade stocks and they're going to make a lot of money off of it. And they did so. They were doing so well. This individual made, I believe, 40 times of her profit in a few years. Excellent. But then, of course, began to lose it all and tried to double up and unfortunately lost all of it and more. So this is what you get when you have such tantalizing prospects. You have people who take it too far, gamble everything away. This isn't the first time this has happened. Every boom, every bubble has this occurring. People don't know what they're doing and they get into a big mess. That's why I try to educate. That's why there are others out there trying to educate for us to know specifically what we've always been told, and that is to diversify. People don't understand diversification, so I really harp on it often, but we need to hold on to real assets. You can't just trade in the stock market and think that you know what you're doing just because you made some money. You could get lucky, absolutely, but it is very, very dangerous. Let's look at China, dethroned as the world's most liquid stock market by none other than the USA. But this is something that's continuously trading here, and it will basically see more fluctuation, more volatility as time goes on. I'm just noting this here as basically what we look at is massive levels of volatility occurring. One day they're the biggest, one day they're not. But what you will have is undoubtedly more chaos occurring once the Federal Reserve raises interest rates, if they can. If they can't raise the interest rates, you're just going to have more of the same. You're going to have much weaker economies. Will they have to get into QE4? At some point, they certainly will. I believe that they could engage in a minor raising of the interest rates, but still engage in a QE4 program. We don't know what they're planning on doing. All we know specifically is that whatever we see in the stock markets do not really correspond to what we see in the actual real markets. As we see, people in Detroit can't even get paid. Let's look at this right here. Trouble in paradise. Speculative investors are a major force in Australia's red-hot property market, helping push the value of residential property $500 billion higher in the past year. In fact, more than half of new home loan approvals are for investment purposes. That's called a bubble. That's not called a boom. It's not called a healthy rise. That's called a bubble. And people aren't willing to admit this in reality, but let's just face it. Let's face what we have. If there's a bubble, let's face the reality, the truth. Let's get our money out of the bubbles before we are there basically watching it pop before our very eyes. We get our money out of the bubbles and we put it into things that are safer, that are more valuable investments at that time. Yes, the property market is in, let's call it a boom for the moment, and it could rise significantly higher. But are you willing to take that risk? Do you really want to take that risk, or would you rather just take the money and run? Well, a lot of people are just going to continue to pour in their money. Now, what happens when a government spends more than it has? What happens when people lose faith? Well, you have this. Puerto Rico confirms it failed to make a $58 million debt payment. All nations around the world will be in the same situation right here, except some of them are going to try and print their way out. The government of Puerto Rico confirmed Monday that it failed to make a $58 million debt payment in a significant escalation of the debt crisis facing the U.S. island territory. So this is technically a default. So they actually had defaulted on their debt right here, no different than what happened in Greece recently to the IMF. They owe their creditors money they couldn't pay. That's called a default, any way you wish to slice it. This is just the beginning because all nations will do this. Those with a central bank are just going to print their way out. They're going to cause massive levels of inflation. But if they print their way out and devalue their currency, that's going to make them look more attractive for exports. So they're going to do it willingly and lovingly. They're going to be engaging in these policies. If you found this video informative, please give me a thumbs up. I'm trying to work on some new type of videos, some new content, so stay tuned for so much more, not just the daily videos from the Money GPS. Last but not least, if you found this video informative, I know you'll find my book, The Money GPS, even more informative. You can actually flip through the book for yourself. If you go over to Amazon, they have this look inside feature which allows you to flip through the book. So you can go over there, look through it, and see if you like it. Take care.